In this short video, we'll discuss the basics of dental insurance so that you can explain this important benefit to your clients and answer most of the questions that they will have. Dental insurance is an important part of the employee benefits package, and that's because it is a very popular benefit among employees. Employees tend to like dental insurance just about as much as health insurance, yet it's much less expensive, so that provides a great return on investment for the employer's benefits dollar. Employees and their families need to sign up for dental insurance for a number of reasons. One is because people with dental insurance tend to go to the dentist much more often than people without dental insurance. So they go and get their annual or semi-annual cleanings and checkups more often than those who don't have dental coverage. Also, there is a strong connection between oral health and overall health. This is sometimes called the medical-dental connection. There are a number of medical conditions that can be detected during a dental exam, and poor dental maintenance can lead to multiple medical conditions, so dental care is an important preventive care benefit. So with that, it is important to understand the basics of dental insurance. In other words, what differentiates one plan from another? Well, there are two common types of dental plans. One is called a DMO, or Dental Maintenance Organization. Think of it as a dental HMO. Another is called a passive PPO. With a DMO, everything is paid based upon a fee schedule, meaning that the member knows how much will be paid for any particular service, and then they would pay the remaining amount. The network is going to be much smaller. They do have to receive care from in-network dentists, and many times will have to choose a primary dentist and get a referral if they need to see a specialist. DMOs are a pretty inexpensive dental plan, but the more common and more popular type of dental plan is called a passive PPO. With these plans, the insurance company pays a percentage of the bill up to an annual maximum, and members can receive care in or out of network, so they can still see their existing dentist even if they're not part of the plan. So on a passive PPO, after the calendar year deductible is met, and it's a pretty low calendar year deductible, the dental plan will pay a percentage of the covered expenses depending on what category they fall into. This is called coinsurance. And the three most common categories are preventive care, basic care, and major services. So preventive care might be covered at 100%. Basic services, the dental plan would pay 80%, the member would pay 20%, and major services would be split 50-50 between the plan and the member. There are other coinsurance percentages, but this is definitely the most common. So after the deductible, the insurance pays a percentage of the bill, depending on what category the service falls into, up to an annual maximum amount. Usually that's going to be in the $1,000 to $3,000 range, although there are plans with higher limits and some with no maximum limit at all. So plans will differ based on the annual deductible, the coinsurance percentage for preventive, basic, and major services, and the annual maximum amount. So this is what a common plan might look like. $50 individual deductible, 3 times family limit, coinsurance of $180 or $50 for preventive, basic, and major, up to an annual max of $1,000, $1,500, or $2,000. But again, all of this can vary a little bit. So now that we understand the basics, there are some important questions that we need to ask about the dental plans that we're selling. One is, how are periodontics and endodontics covered? Are they covered as a basic or major benefit? If they're covered in the basic category, then the plan might pay 80% of the cost. So the member would only be responsible for 20%. If they're covered as a major service, the plan might only pay 50% of the cost. So the way to think about this is periodontics and endodontics are pretty expensive. If the plan has a low annual maximum limit, let's say $1,000 or $1,500, if somebody needs periodontic or endodontic services, if they need a root canal or treatment for gum disease or something like that, then likely they're going to hit their limit no matter what. And so in that case, it might make sense to cover perio and endo as a major service to keep the premium down a little bit. If it's a higher annual maximum benefit, then the member is less likely to hit their benefit amount. And so covering perio and endo as basic might make more sense because the insurance company pays more and the member is going to be left with less out of pocket. Another question has to do with the annual max. Does the cost of preventive care count toward the annual maximum benefit? It usually does, even though the insurance is paying 100%, but whatever they're paying, that might count toward that annual max. Some plans it does not, and some might give you a choice of purchasing a rider that will waive that so that the preventive services do not count toward the annual max, and it makes the benefits go a little bit further. Another question is, does the member still get the insurance discount for in-network providers after the annual max has been met? That can be an important benefit if their dentist is in the network. The most important question, though, has to do with non-network coverage. So how are non-network benefits paid? If you see a dentist that is not contracted with the dental provider network, there are two ways to handle this. One is called MAF, or maximum allowable fee. The other is R&C, or reasonable and customary. So if you think about health insurance versus dental insurance, health insurance has a separate higher deductible when you go out of network. With dental insurance, there's only one deductible for in and out of network services. With health insurance, when you go out of network, the member pays a higher coinsurance percentage. Not the case with dental. It's the same percentage of the bill that the member is responsible for. With health insurance, when the member goes out of network, the insurance plan is typically going to pay the same amount they would have paid to an in-network doctor, because those out-of-network doctors are not contracted and don't have a discounted rate with the insurance company. They're much more likely to balance bill the member. With dental insurance, there are two options. One is when the member goes out of network, the plan pays based on the in-network amount. That's called the maximum allowable fee, and the dentist is likely to balance bill. But the other option is a percentage of reasonable and customary, so that the payment amount to the dentist is actually increased for out-of-network services, and the dentist is less likely to balance bill. So the terminology here, you might hear MAF for maximum allowable fee or MAC for maximum allowable charge. Again, with that, balance billing is more likely. The other option is a percentage of reasonable and customary or usual and customary. You'll hear both terms. And usually that's set at 80 to 90%, meaning that 8 or 9 out of every 10 dentists would take the dental plan's reimbursement amount or allowed amount as their total payment, so they're less likely to balance bill the member. One other important point has to do with waiting periods. Is there a waiting period on major services? With some plans there is, with some there isn't, unless the group and the member had prior dental coverage. So that prior dental coverage could offset a 12-month waiting period on major services. With some plans, they might impose a waiting period on groups under 10, but over 10, there is no waiting period. Usually, if there's a late entrant, then they would have a waiting period on their major services. And then finally, orthodontics. Does the plan cover orthodontics for children? If so, the employee plus child and employee plus family rate will be a little bit higher. Does it cover orthodontics for adults? If so, then all coverage tiers will be more expensive. Is there a waiting period on ortho? Normally there's not, but it's worth asking. And what is the annual or lifetime limit? Most plans have a lifetime limit on ortho. What that means is if you use an orthodontic benefit on one plan and then you switch to a different dental plan that covers orthodontics, any amount that has already been paid out will reduce what your ortho benefit is on the new plan, so that the used amount transfers from one carrier to another. And then finally, contribution requirements. So some plans are employer paid. The employer pays 100%. Usually the carrier will have a high percentage participation requirement for those plans. Some plans are contributory, meaning the employer contributes some, but the member has to contribute a portion of the bill. In that case, there will also be a higher participation percentage requirement. For voluntary plans where the member pays most, if not all, of the bill, the participation requirement might be lower, but the price will be a little bit higher for those plans. And that is it for this one. Thank you very much. Hope that you learned a thing or two, and good luck selling dental insurance.